All right, welcome back to Finance Insider, everybody. I'm Big Joe, and we're diving into some seriously interesting stuff you guys sent our way. Ready to unlock some market secrets?
I'm Mary, and I'm ready to break it all down. Today's deep dive is range-bound markets.
Oh, range-bound markets.
Now, that might sound a bit, technical.
Yeah.
But trust me, this is a concept that you'll want to wrap your head around because
It's a big one.
it is. Okay, so range-bound markets. Think of it like this, right? Imagine a boxing match
Okay.
where the fighters are kind of stuck between the ropes. Right?
Stuck between the ropes. Got it.
They can't really break free, right? That's kind of the energy of a range-bound market. Prices, they're trapped between a clear high and low. They just bounce around like a ping pong ball.
That's a great analogy. So unlike, a trending market where you've got these clear upward or downward trends, a range-bound market, it's kind of like this back and forth between those boundaries.
Yeah.
You got it. So unlike a trending market, right, where the prices have, this clear upward or downward momentum, a range-bound market, the prices just keep bouncing between those boundaries. Right.
And those boundaries are what we call support and resistance levels.
Yes.
Okay, I got that. But how do we actually spot these range-bound situations when we're looking at charts or, analyzing the market? What are the telltale signs?
So there are some key signals that can really help us pinpoint these scenarios. One of the most reliable tools is the ADX.
ADX.
The average directional index.
Okay.
Now, if you see the ADX kind of dipping below 25,
Below 25, got it.
that's a strong indicator that the market, it lacks a clear direction, and it could very well be range bound. Think of it like a measure of the market's commitment to a trend. So low ADX, low commitment.
Low commitment, okay. So we're looking for a low ADX to tell us there isn't a strong trend.
Exactly.
And that maybe we're in this range. What else? What other things can we look for? So another tool that we can use to help us out is Bollinger Bands.
Bollinger Bands, I've heard of those.
Yeah. They can be super helpful in this situation, right?
Yeah.
Because what Bollinger Bands do is they visually represent price volatility over time.
Okay.
Right?
Yeah.
Now, if you see those bands kind of tightening up, almost like they're being squeezed together,
Okay, yeah.
it suggests low volatility. And that, my friend, that's a classic sign of a range-bound market.
A classic sign.
A classic sign. And conversely, right, if those bands start to widen, then it could be a signal that we're about to see a breakout.
Okay, that makes sense. So if they're getting squeezed together, low volatility, maybe we're in a range. If they're widening, maybe something's about to happen, a breakout.
Exactly, yeah, you got it.
Okay, I like it. So let's say using those tools, we figure out that we are in a range-bound market. How do we as traders actually use that information? How do we trade?
Okay, so the fundamental strategy, right, when it comes to range-bound markets is to buy low and sell high.
Buy low, sell high. Okay, classic.
Right, you're capitalizing on those price swings within those boundaries, right?
Right.
So you aim to buy near that support level, right? And then ride that price wave up towards resistance and sell before it, potentially drops back down.
Okay. Sounds straightforward.
Yeah.
But I'm sure it's, a little more nuanced. Can you give us a real world example to kind of illustrate this?
Of course. Absolutely.
Perfect.
So let's take a look at the GBP-USD currency pair.
GBP-USD.
That's the British pound against the US dollar.
Okay, yep. I'm familiar.
Okay, cool. So imagine it's kind of trading within a range of, let's say, 1.250 and 1.2600.
You could.
Right? Buy the pair as it kind of approaches that 1.250 support level, anticipating a bounce back up towards that 1.260 resistance.
Got it.
Right.
So you're buying at the bottom of the range.
Exactly.
And you're hoping to sell it at the top of the range.
Exactly. And once it hits that resistance level, you sell, lock in your profit.
Yeah, makes sense.
It's all about riding those predictable swings within the established range.
Okay. Now, are there any specific types of currency pairs that, kind of lend themselves to this range-bound behavior?
Interestingly enough, currency crosses,
Okay.
which are pairs that don't include the US dollar, often exhibit strong range-bound characteristics.
Right.
Pairs like UKRCHF, the Euro Swiss franc, and AUD-NZD, the Australian dollar, New Zealand dollar, tend to, have a little less volatility and kind of move in more predictable patterns.
Interesting.
Which makes them,
good candidates.
Ideal candidates for this type of trading.
Okay. So currency crosses, maybe something to look into for this type of trading.
Yeah.
We've got our ADX, we've got our Bollinger Bands to help us figure out if we're in a range-bound market. And then if we're looking for those buy low, sell high opportunities, particularly maybe with these currency crosses. Any other tips or tools to help us really fine tune our approach?
Yeah, there are a couple more tricks that we can kind of use.
Yeah, to refine our approach here. One technique that's pretty helpful is using channels, which are essentially lines drawn connecting the highs and lows of the range.
Right.
They kind of help you visualize those boundaries a little bit more clearly.
Okay, so it's like drawing lines on the chart to help us see the range.
Exactly.
Okay.
Exactly.
Got it.
Additionally, right.
Yeah.
Oscillators, things like the stochastic or RSI, can be really helpful in identifying potential overbought or oversold conditions within that range.
So overbought or oversold. Okay.
Yes. Now, those signals can be really, really valuable for pinpointing, those optimal entry and exit points.
Okay, so we've got channels for visualizing. We've got oscillators like stochastic and RSI for figuring out our entries and exits. That sounds like a pretty well-equipped toolbox.
Yeah.
I like it.
It is.
Anything else that we need to kind of keep in mind here?
The crucial takeaway here is understanding that a range-bound market requires a specific mindset and a specific approach.
Right. Recognizing these conditions, that's step one. And then from there, being able to effectively navigate them and kind of maximize that trading potential.
I like it. Okay, that's a good place to wrap up part one. And part two, we're going to dive into. All right, welcome back to Finance Insider. We're picking up right where we left off talking about range-bound markets. So in part one, we talked about what they look like, how to identify them, and kind of the basic approach, that buy low, sell high strategy. But I want to go a little deeper. It's not just about charts and indicators, right? There's a whole mental game involved in trading, isn't there?
Trading psychology, absolutely. It plays such a big role. And range-bound markets, those can be especially tricky when it comes to your mindset.
Oh, how so?
Well, imagine being stuck in that tug of war we talked about earlier, right? You're constantly waiting for one side to, kind of gain the upper hand for that breakout moment, but it just keeps going back and forth, back and forth.
I can see how that'd be frustrating, like waiting for a roller coaster that never takes off.
Exactly.
It's like, come on, let's go already.
And that constant anticipation, it can really mess with your head. It can tempt you to chase false breakouts, which can lead to losses, right? Or it can make you exit winning positions too early out of fear. Yeah. So patience and discipline, those are really, really your most valuable assets in these conditions.
So it's about accepting that we're in this tug of war, not trying to force a victory before it's time.
Exactly. Embrace the range. Focus on those predictable price swings within those boundaries. Instead of, getting all anxious about a breakout that may or may not happen, master the art of profiting within that existing structure.
Embrace the range. I like that. So let's talk about some more advanced strategies for actually maximizing our profits in this environment. We talked about the basic buy low, sell high.
Yeah, but the basic, there's more to it. There are definitely ways to kind of refine your approach beyond that. One technique that I like to use is using multiple time frames to confirm your trading signals. So for instance, let's say you're looking at a daily chart and you spot a potential buy signal near support.
Okay.
Right. So to add an extra layer of confidence, zoom into a shorter time frame, like an hourly chart.
Got it.
If that shorter time frame confirms the signal, it strengthens your case.
Let's say it's like double checking the map before you set off on your journey.
Yeah.
You want to be extra sure that you're going the right way.
Exactly. It's all about increasing that, probability of success. Another powerful tool set that we can use are momentum indicators, things like the MCD or the RSI.
I've heard of those. Remind me though, how do those work and how can they help us in a range-bound market?
So those essentially, they gauge the strength and direction of price moves, right? Yeah. So in a range-bound market, they can help you spot those points where the price is likely to reverse within those boundaries. For example, if the RSI, right, is flashing an overbought signal near the top of the range.
Okay.
That could be a good opportunity to consider a short position.
Got it.
Right. Betting on a price drop back down towards support.
So it's about fine-tuning our entries and our exits, trying to catch those reversals within that range.
Exactly. It's like being a surfer who's mastered riding the waves inside a bay. You know?
Okay.
You're not trying to escape the bay. You're becoming a pro at riding its unique waves.
I love that analogy. It really highlights that range-bound markets have their own rhythm and flow. And if you can kind of learn to dance to that rhythm, you can potentially make some serious profits. Any other advanced strategies you want to share?
Of course. So another powerful technique is combining technical analysis with fundamental analysis.
Oh.
So for example, if you're trading a currency pair that's stuck in a range, pay close attention to any upcoming economic data releases or central bank announcements.
Right.
Because those events can potentially, disrupt the range and create volatility and potential breakouts.
So we're keeping an eye on the economic calendar, looking for those potential catalysts that could kind of shake things up.
Exactly.
Oh, got it.
Because those fundamental events, they can act as triggers for breakouts, either, to the upside or the downside.
Right.
And if you can anticipate those moves correctly, you can position yourself accordingly and ride the wave of the breakout.
That adds a whole new dimension to our analysis. It sounds like trading in a range-bound market is anything but boring.
It's not. It's dynamic.
Yeah.
It definitely...
There's a lot of nuance and complexity here.
It requires a different mindset and a different skill set compared to, trading in a trending market. But mastering this is really crucial because markets spend a significant amount of time in these range-bound conditions.
That's a great point. It's not a question of if we'll encounter these conditions, but when.
Exactly.
So you've given us a lot to think about here. We've talked about the psychology. You've given some really insightful, advanced strategies.
Yeah.
In part 3, I'm looking forward to. Welcome back to Finance Insider. We are wrapping up our deep dive into range-bound markets. And I'm really excited to kind of put all these pieces together.
Yeah.
We've learned a lot.
Absolutely. We've covered so much ground from understanding, what defines these markets to exploring, the psychological challenges and those advanced strategies.
Right.
And now I think it's time to really talk about how we can create a solid trading plan.
Yes.
Specifically for navigating these unique conditions.
Yeah, because having a plan is crucial, right? We can't just kind of wander into this tug of war without a clear strategy.
Exactly. A well-defined plan, it's crucial for any market condition.
Right.
But especially in these range-bound markets where, discipline and patience, that's where they really, really come into play.
They're key.
Right. So it all starts with really clearly defining your entry and exit points.
Okay.
Right? Remember those support and resistance levels we talked about?
Yeah.
Those form the foundation of your plan. You'll want to establish really clear buy zones near that support.
Okay.
And sell zones near resistance.
So it's like mapping out the battlefield. You're identifying those key areas where we're going to engage and disengage.
Exactly. That's a great analogy.
I like it.
Right. And once you have those battle lines drawn,
yeah,
risk management, that becomes absolute paramount.
Okay.
Right. You really need to determine how much you're willing to risk on each trade and then set your stop loss orders accordingly. Even though the market might seem contained, unexpected price movements, those can still occur.
Right.
A stop loss order, that's like your safety net, right? Protecting your capital from significant losses.
Yeah, that's a really important point. It's easy to get complacent, I think, when the market feels predictable.
Oh, yeah.
But we always need to protect ourselves. So
yeah.
We've got our entry and exit points. We've got our risk management. What else do we need?
So position sizing.
Position sizing, okay.
That's another critical element that refers to how much of your account you're actually allocating to each trade, right?
Okay.
Now, in a range-bound market where, the potential for whipsaws and false breakouts is higher, you might consider slightly smaller position sizes than you would in a trending market.
Makes sense. Smaller positions to navigate that choppier environment.
Exactly. What about profit targets?
Profit targets. Yeah. How do we figure out when to actually take profits within those ranges? Yeah.
So your profit targets, Those should align with both your risk management strategy and the overall range of the market.
Okay.
A common approach is to aim for a risk-reward ratio of at least 1 to 2, meaning, you're aiming to make at least twice as much as you're risking on each trade.
Okay.
Right.
Okay.
So for example, if your stop loss is set to limit a potential loss to, let's say, $100, your profit target should be set to capture a potential profit of $200.
So we're always kind of thinking about risk and potential reward when we're setting these targets up.
Absolutely. Absolutely.
Is there anything else we need to keep in mind as we execute our plan?
Patience.
Patience.
I cannot emphasize this enough.
Okay.
In a range-bound market, it's so tempting to react to every little price fluctuation.
Right.
But remember, not every swing within that range, presents a genuine trading opportunity.
Right.
Right. Exercise discipline, wait for those high probability setups that align with your predefined plan.
Mm-hmm. Yeah. So being selective, waiting for those perfect pitches to swing at, not trying to hit every ball that comes our way.
Exactly. And finally, remember that your trading plan, it's not set in stone.
Right.
Continuously review it and adjust it as needed.
Yeah.
Market conditions, those are constantly evolving.
Right.
So your plan should evolve with them.
Makes sense.
Regularly evaluate your trading performance, identify those areas for improvement, and tweak your approach accordingly.
So it's a living document, not a rigid rule book.
Exactly.
We need to be adaptable, responsive to those changing conditions.
Yes.
This has been a really insightful deep dive. We've gone from understanding range-bound markets to actually building a strategy for how to trade in them.
Yeah.
Any final words of wisdom for our listeners as they kind of navigate these often misunderstood market conditions?
Remember, range-bound markets, they're simply a part of the market cycle.
Right.
They can be challenging, but with the right mindset, the right tools, and a solid plan, they can also present fantastic opportunities for profit.
Okay.
Develop that plan, stay disciplined, and embrace those range-bound waves.
Embrace the range. I love it.
Happy trading, everyone.
Happy trading. That's a wrap on another fascinating Finance Insider. Until next time, keep those charts moving.